Subscribe to our YouTube channel and press the bell icon to get the latest updates.
Hello friends, this is Vijay Bhambwani. I hope my videos are helping you basically navigate the markets better, understand the subtle nuances of the market better, and helping you become a better trader and investor. I'm here to share the experiences that I've had in this market since I've been trading since 1986, that's 32 years. And currently, the burning topic that is worrying a lot of traders is the rise in the US dollar. As a matter of fact, the US dollar index has scaled its highest after December of 2002. That's almost a 2-decade high. What does it actually mean? And more importantly, how do you profit from it? You see, the market is known to give you challenges thrown at you ever so often. But you and me as traders are supposed to find solutions and profitable opportunities in those adverse times. Now, why is the dollar rising? If you've been watching my videos for long enough, you know that I've split the year into 12 compartments, each of a respective month. And I tell you that so-and-so commodity or so-and-so equity or so-and-so asset is best traded in this time of the year. I've also split the decade or the year into favorable and unfavorable times. For example, the US presidential election cycle. Since it occurs every 4 years, in 2020, for example, we had the general elections in the US. The dollar was pumped higher, gold prices were pushed lower, and inflation was brought under control. This is a standard operating procedure. Similarly, every 2 years, there is a midterm election cycle. We have a midterm election now on 8th November 2020, because of which the US is pushing the dollar price higher. Gold and silver price are likely to come down because the dollar is the invoicing currency. So when the dollar becomes higher, gold and silver come down. And now after 8th of November, when the dollar starts coming down, gold and silver will start going up. Why is the US interested in pushing the dollar higher? Because the US is the world's largest debtor nation and it has to repay a lot of loans and service those loans, which is pay interest in dollars. So if the local currency, the US dollar, is strong, number one, all imported goods become cheaper. So that kills imported inflation. Number two, repayment and servicing of loans become cheaper because the local currency is able to buy a lot more of the counter country's currency. So if the US is curbing imported inflation, what happens to its trade partners? To them, the US exports inflation. So we are therefore importing inflation. As an emerging market, which is a net importer since independence, India will find the landed cost of goods and services more expensive, even though the price doesn't change in the overseas market. But if the dollar becomes strong, our rupee weakens, we'll have to pay more rupees to be able to buy those goods. So to that extent, we come at a disadvantage. Is there a way to make money from this? The answer is yes. If there are problems in the market, there are also solutions, and I'm here to provide solutions to my viewers. Which kind of companies are likely to feel the heat and which kind of companies are expected to gain? Now, you see, popular perception is that technology stocks or net exporters will make a lot of money because they are going to make money in dollars. I would humbly beg to differ. I come from a business owner's family, generations old business owning family, and I can tell you that the days when India's goods importers overseas used to accept whatever contract that we used to give them without a readjustment clause. Nowadays, the foreign buyers are smart They tell you, we'll allow you to profit from the currency fluctuation, but only to this extent. If the rupee weakens against the dollar by more than that percentage, the entire price is renegotiated. So the exporters are not really making milk and honey if the rupee collapses against the dollar. That conception is mislaid. It's a misconception. So it is better to find those stocks which are likely to come under pressure when the US dollar becomes stronger versus the rupee and attempt to short sell it. I agree, selling short is not easy and it does not come naturally to everyone. But then, if you want to survive in this market, you'll have to adapt. This market is like a chessboard, and our money is like chess pieces that we have to keep shuffling on the board and go and move as many steps as we can so that it is to our advantage. Now, which companies, which sectors, which stocks will come under pressure? Number one, all those companies that are dependent on raw material which is imported. Obviously, since we are importing and the rupee is weakening against the dollar, the landed price of those raw materials is going to go up. So the input cost of the company is going up and profitability is going to come down. Now, are all importers going to suffer uniformly? Not necessarily. Those companies who are importing raw material, putting it as work in progress and exporting that as finished products will not suffer as much as companies which are importing that raw material and selling locally. All right? Because you import in dollars, you add value to that product as a raw material, you make it into finished goods and sell it in rupees. Your cost is escalated and you want to pass on your cost to the consumer. He resists buying, so your sales fall. These companies will lose the most. Then, companies that have a lot of foreign exchange loans, particularly US dollar denominated. In any case, dollar denominated loans in foreign debt is the most common. All right. Now, why is it that those companies who've taken loans in foreign exchange, especially in US dollars, are likely to suffer? Say, for example, they've borrowed money when the USD was 65. So when they got $1 in the country, they got 65 rupees for it. Now, they have to pay interest in dollars, so they have to, and if the dollar has become 75, hypothetically, they have to pay 75 rupees to buy each dollar to pay interest. And when they want to repay this money, if the dollar is hypothetically at 80 rupees, they will have to spend 80 rupees to buy $1 to repay their debt. So number one, there is an interest loss, and as the dollar becomes stronger, you're paying out more and more in rupee terms by way of interest. And number two, there is a principal loss, and you're paying more and more by way of dollar denominated debt redemption. In my video 2 weeks ago, I told you about NBFCs, where the money is a raw material and the finished products. Many of these NBFCs may also have exposure to dollar denominated loans. And do note how many prominent NBFC shares are now tumbling like dominoes. Similarly, because of the dollar currency peg, you will have many such companies on the sectors that I just discussed whose shares will come down. Be savvy enough to trade or short sell either on an intraday basis or on a swing basis. Any other sectors that are likely to fall? Yes. Companies that are in the oil-based paint business. Oil-based paints are made from petrochemicals and they are imported. Plastics and polymers are also derived from petrochemicals and they are also imported. And the landed price of those raw material costs are high. So these are sectors where you have prime candidates for selling short and making money either on an intraday basis or on a swing trading basis. I admit that everybody is not comfortable selling, but then those who can will have the dance with the prom queen. And that's what winning is all about. On this cheerful note, my friends, I bid goodbye to you, not before reminding you to click like on this video if you liked what you saw. Subscribe to my YouTube channel if you haven't already done so. Good, bad or ugly, I'd love to have your feedback in the comment section, and please refer my video to your family and friends so that I reach out to a wider audience and help them take more informed trading and investment decisions. Thank you for your patience and sticking around in this video till we meet again in my next. This is Vijay Bhambwani signing off for now. Take care. Have a very profitable day. Bye-bye.
Our new research uncovers some shocking truths behind today's hottest investment opportunity, electric vehicles. Don't invest your money in EV stocks before seeing our research. Click here to sign up for our special event to know it all for free.